Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. Trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson, editor of WallStreetWindow.com. Welcome back to the show, Mike.
Oh, it's great to talk with you. Interesting times we live in, to say the least.
Mike, what kind of recovery are we seeing, and what kind of a recovery do you expect?
Well, there's two answers to that. One is the economy, and the other is the stock market. And the stock market fell over 30% in March, and we've had a sharp rally that's taken back a little bit more than half the losses, and all the economic news has been a disaster. In fact, the GDP growth shrank dramatically in the first quarter, is expected to shrink again, and it's basically, the first quarter shrinkage was, there was only one quarter in 2008, 2009 that was worse, so that's how bad it was. And then this quarter is going to be worse than any quarter we've seen in decades. You combine the two, you can't find a contraction since the 1930s for the U.S. economy. So people, what kind of recovery we're going to get? I've been thinking for the past month that the stock market was rallying into when the U.S. economy would, so to speak, reopen, when some of the lockdowns would come to an end, and then we would be at high risk of peaking out and then rolling over and going back down. And on a charting basis, all we've done is rallied up into the 150 and 200-day moving averages on the S&P 500 and the Dow. And the leadership in the market is just a couple tech stocks. It's making up 25% of the gain in the S&P 500. It's like Google, Amazon, Apple, all over again. And the Russell 2000 starting to weaken. A lot of sectors are already dumping. The banking stocks are falling. Regional and small banks are near the lows already. Of course, airlines have collapsed again this week. And a lot of the hospitality, leisure type companies, they appear to be starting to roll over too. So for the people that want to trade the rally, it's more like how much longer can these four tech stocks go up? I don't know, but I don't really care. But in bear markets, what happens is the 150 and 200-day moving averages act as resistance, and the market will tend to stay below those levels throughout most of the bear market. We saw that with gold in the mining stocks from 2012 to really the first quarter of 2016. There wasn't any successful rally for the GDX that enabled it to stay above the 200-day moving average for more than 3 weeks. In the last two bear markets for the U.S. stock market, the same thing happened. For the S&P 500, it stayed below the 200-day moving average. Yes, you get sharp rallies back up to it, but then it would stall out. And typically, in a bear market rally, the big gains come in the first week or two, and then the market will stop kind of going up and just drift for several weeks, sometimes 2 or 3 months, then start to go down. So all along, I kind of suspected that's what would happen. However, I was thinking that the reopenings, you know, the buy the rumor, sell the news moment would be in June, because I thought nationally that's when the reopenings would really begin. in the United States, but they're starting now. Texas is starting to lift its lockdowns. Georgia did last week. Florida's talking about doing that, or they're starting to. So I think the news is already beginning now. And personally, I see no reason to wait to June, if you were thinking of using this rally to lighten up, to sell things that no longer really make sense, such as airline stocks, frankly. The airline industry is not likely to recover for at least a year. Airlines are cutting back routes. JetBlue, for one, said it no longer wants to fly to Las Vegas. I've been reading transcripts of conference calls with the casinos in Vegas, and they say they're going to open up in June. However, they don't have any expectation that there's going to be people coming via airplane. They're expecting all the visitors will basically be from California or surrounding states. And one of the big casino chains, MGM, they have about 10 casinos in Las Vegas, and they're only going to open 2 up, the New York, and Bellagio, and they are only expecting, they're only going to allow 20% of the rooms to be used, and they're not even going to enable people to go to the restaurants. You're just going to have to order room service. There's talk of only having 4 players at a poker table, limiting the number of people that can play craps and blackjack and so forth. So the point is that even though, as an example of what's going on, even though things are opening up in Vegas, are going to, there's still going to be such restrictions that it's not going to be like it was. And that's what we're finding out in these other states, such as Georgia, that opened up last week. Some restaurants have opened, but, they're only allowing half the tables to be used. And there's an interesting article in the Wall Street Journal that said that even though they opened back up, the amount of traffic on the road is not increased. So it's kind of, to me, at least now, I don't think it's going to really lead to, any meaningful recovery. We're still in a recession, depression, whatever you want to call it. And yeah, I mean, you can't lose millions of jobs every single week. That'll come to an end, but I don't think there's going to be this massive recovery for quite some time. And then there's, of course, the risk of the virus getting worse in the fall. Who knows? Because we haven't locked down as long as they were saying they were going to, and the cases are still growing in many parts of the country. So I just think for trading this rally, and the trade has happened. I believe we've rallied up far enough, and if you're playing a big boom, it's time to sell that trade and be happy and take the gain. And if you're looking to even bet against the stock market, it may take a few weeks or even a month or two before it really starts to decline. But, there are sectors now crumbling. And I've mentioned the airlines, but I'll mention, one stock, that I am short, that could be the sort of thing that might interest people. So in Las Vegas, there's a company, the Howard Hughes Corporation, and they own a baseball stadium, a AAA baseball stadium. They own the baseball team that neither one is going to be used this year. There's not going to be minor league baseball. They own shopping centers in Las Vegas. They own a development that's being built, and they also own offices in Texas, which is, of course, smashed by what has happened in the oil sector. And it's a stock I shorted, and it doesn't pay a dividend. So, and I don't, I don't see how real estate in Las Vegas is going to do very well. for the next year. So there's things in the economy that, I think you could bet against. I mean, it's tough to do that in bull markets, but we're not in a bull market. But then if we want to flip things around, it's and buy things and make money, again, the place to be is gold and the mining stocks, because if the recovery is not going to be what people are hoping, and I don't think it is, that's going to just mean the Federal Reserve, the Treasury Department is going to print more money. There's going to be more stimulus bills, and on and on. And we've already seen, gold make a new high for the year since we last actually talked. And yesterday, Newmont Mining made a new 52-week high, which is also a stock I own. So, and other big cap mining stocks have done the same. So I think gold is a buy on any dip in the market. The broad market is use the rallies and lighten positions. And this is what you do on the charts. I mean, the gold in mining stocks are above the 200-day moving average. It's a long-term uptrend. It's a bull market, and you buy dips. And when something's in a bear market, you do the opposite. So that's kind of how things are going to be for the rest of this year, probably well into next year too.
We'll have more with Mike Swanson right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Mike Swanson. Mike, how's the financial sector going to do with so many small businesses on the brink of collapse?
Well, it's a tough sector, and I actually yesterday talked with someone where I live that is on the board of directors of a bank, and they were telling me that they want to buy bank stocks, regional and small bank stocks, but they don't. The stocks are falling, and in fact, yesterday I did a scan, and a lot of small banks were down, and actually down this morning, even when the stock market was up. And the biggest problem they have isn't so much that the businesses are going to go bankrupt or not pay them, or real estate people with mortgages aren't going to pay their mortgages. I mean, the banks were able to survive, the smaller banks, that sort of situation because they can foreclose on homes, get the assets, and so forth. But the biggest problem, and this fellow pointed this out to me, is that interest rates are zero. So the banks can't make hardly any money on the loans they do make. And we've seen in Europe what negative rates do to a banking system. I mean, the banking stocks in Europe have been among the worst sectors in the entire world to invest in since 2008. I mean, they rallied, of course, in 2009, 2010, but since then, they just go down, down, and down. Negative rates kill banks because they kill profits. So I don't believe we're going to negative rates, but they're at zero, and I do, just a disaster. So I would like to buy these local banks and regional banks myself, but it's probably something to be doing in a year or two, because right now it's just tough, and that's the story in lots of pockets of the economy. Business revenue is contracting. A lot of companies are now suspending their buyback operations, which that's probably a good thing, because I think they're a waste of money. But they're also suspending their dividend, and it's just a sign of the stress that's in the economy, and it's not going to end this week. You can bottom out in the economy this summer, but when is the real growth going to return? When will any of us be able to get on an airplane and fly across the country without being scared? I think that's the big question, and when we can answer we're not scared to do that, or it's not a big hassle, then we'll be at the point where the economy is truly recovering and we're going into a new economic expansion. But we're just in the first inning of this depression, recession, whatever you want to call it.
We'll have more with Mike Swanson right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mike Swanson. Mike, getting back to the gold sector, what's popular there? Is it mining stocks, junior miners?
Well, that's the interesting thing. Gold is growing in popularity, I would say, with institutional investors and hedge funds, endowments, and so forth. We've seen over the past 2 years some high-profile people go on CNBC and recommend gold. For example, Paul Tudor Jones did it a year ago, but he's not the only one. But when it comes to, small investors and traders, it's still not popular at all. I've got an account with Robinhood, and they show you the 100 most popular stocks. They even rank them by the number of people who own them. And out of that top 100, there isn't a single gold ETF or mining stock on the list. Number one is ACB, the cannabis company, but 8, 9, 10 are airline stocks. These people were jumping in airlines because they saw them go up in March, and now the airlines are crashing on them. Tesla's on the list, General Electric, things like that, but not mining stocks. So, to me, that's good. That's a good sign because I do believe the day will come when a lot of small traders get interested in gold and silver and even junior mining stocks, but it creates an opportunity for us to get ahead of the masses, so to speak. And one thing that has happened, which I think is good actually for the sector, even though it may not sound like it at first, is in March, these triple ETFs, JNUG and Nugget, that are were 3 times ETFs for mining stocks, they malfunctioned and blew up. We've seen malfunctions in ETFs in the stock market. There was an oil one that blew up. But these 2 ETFs, they did attract day traders and so forth. And now that they've blown up, I think those type of people that traded those ETFs, may realize, well, look, I can get a better return in junior mining stocks, and I don't need to buy these crazy ETFs that, have problems. So I think that's actually going to help the overall sector, going forward. I mean, the ETFs still trade. They're not 3 times anymore. They had to do another reverse split or 2, and now they're like 2 times ETFs. But hopefully people have learned their lesson from how crazy these things are to get into real stocks.
You were mentioning earlier in the interview, road traffic, even in places that have opened up a bit, is not up. What does that mean for the oil business?
Well, right now there's 1/3 less gasoline being used on the roads than it was in February, and the price of gasoline is trading at a level. I'm sure I can explain this correctly. If you adjust the price of gasoline for inflation, it's actually the cheapest it's been since World War II. So when I started driving, it was 1991. I was 16 years old, and gasoline was like $1 and a nickel or something where I lived when I was 16. And now it's around $1.25. But even though the price sounds higher, $1.25 is higher than $1 and a nickel, if you can turn today's prices into 1991 prices, it's actually 65 cents. So gas in 1991 dollars is 65 cents when it was $1.05. So that's how cheap it is. And that $1.05 was the cheapest it ever was since I've been driving cars. So this is like the cheapest adjusted to inflation the gas price has been in not just, my driving times, but just about everyone's lifetime listening. So that's how, weak the demand is. It's not going to be a permanent situation, but I think it's like the rest of the economy. It's not likely. Well, it's probably the oil and gas prices will probably bottom out if they haven't already, but they're not going to go into a new bull market anytime soon. So that's going to hurt the energy companies, or some of them that don't have good balance sheets. The giants like Exxon that do, they'll survive, and maybe the stocks will do okay, but there'll be many that go under.
Right. And here in Canada, like I said, great low prices, great time to go on a road trip, but there's nowhere to go. All the resort towns are saying, because traditionally the long weekend coming up is when people open up their cabins and cottages, but people in cottage country don't want to see you. So
no, and then it's an interesting time because we all have decisions to make, about how we want to go through this ourselves. It's hard to sit in your house if you got the money. You can't fly, but we can get in a car and drive to the beach or go somewhere. But then you get there, and do you want to go to a restaurant where everyone's wearing a mask? Or do you want to risk getting the virus? I don't know. It's just questions we all have to ask and answer ourselves.
Are pharmaceutical stocks taking off because everybody's working so hard to find cures, treatments, and vaccines?
Yeah, they actually are. The biotech sector, besides gold and these like 5 technology stocks, the biotech sector is another pocket that is performing very well in the stock market. There's several biotech stocks that have made new highs, and many are actually working on treatments or vaccines or so forth. But honestly, I don't have any interest in trying to buy those stocks because I have no idea which one of these drugs has better potential than another, or which of these companies have a better chance than another one to get a vaccine. I have no idea about any of that stuff, so I don't even try to play that game, because that's what you're betting on, is which one's going to hit the jackpot. I've got no idea.
Well, if you were interested in Vegas,
that's right.
Pharmaceutical,
maybe.
Yeah, trade
probably the rewards are better, if you do hit it.
I was going to say, instead of a craps table, just have the names of pharmaceutical companies on a roulette wheel and let it spin and then pick that.
It's pretty funny. That would probably work good.
Mike, for all of us people who desperately miss sports, this would be the NBA and the NHL playoff season right now. And, of course, the sports books were opened up legally by the U.S. banks a year ago. So what are people doing who normally would be betting on a hockey or basketball or baseball game right now?
Well, there's actually quite a bit of evidence that some of these people are trading stocks, often for the very first time. There's been a surge in the opening of online brokerage accounts, Robinhood in particular, and several articles in the major, financial websites have talked about this. In fact, there's one today on Axios just about millennials jumping in. But there's also people that are professional gamblers or whatnot doing this too. In fact, I like to play poker. That's why I pay attention to this Las Vegas situation so much. And I've been following several poker players that have podcasts, and they're on Twitter and so forth. And they talk about now trading stocks because they don't want to play poker live in person, which is interesting. And these are people that are like high rollers or cater to them. So I think the live poker is dead and may be dead for months. But these people got money, and some of them are doing that. And I assume if they're doing that, the sports people are really doing it because they gamble even more. And this would be right up their alley. How much difference is there between betting on a football game or buying a call option on something?
Well, I recall in England in the 90s when the jockeys went on strike, people were so desperate to bet on racing, they were capturing alley cats and holding cat races.
Oh, jeez, that's wild.
So I guess once a better, always a better.
Yeah. If they're used to doing it every single day, they gotta find some way to do it.
Mike, thank you so much for chatting with us.
Thank you. Good to talk with you.
My guest has been Mike Swanson, editor of WallStreetWindow.com. If you have any questions for Mike or any of our other guests, you can send them to info@HowStreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.